you were looking at this from a financial planning perspective, where's that cash going? Your account is on margin, which means you're paying interest rate on whatever you withdraw. And those interest rates are above 10% right now, which means if you just take the long-term average of U.S. stock market indices, the actual interest rate is roughly in line with the long-term averages of that kind of 10%-ish assumed rate. It's kind of almost a wash when you think of it that way. But where's that cash going? Are you paying down lower interest rate debt? That doesn't make sense. Are you buying a asset like a car that's going to depreciate? That really doesn't make sense. So for a lot of those situations, pulling that cash out and then allocating it or spending it elsewhere is rarely going to make sense because you're inevitably then paying interest on that, which either has to be made up by the gains in the stock, which then you eventually sell to cover some of that liability, or you eventually put money back in order to cover that liability. So still somewhere along the line, you're going to have to pay it back. It's a loan. So for me, I don't really understand where that makes sense in an overall plan.